A budget is a financial tool. It is something that is set out as a plan to be followed for money management. It is a tool that is used by businesses and by individuals and by governments to plan out how money will be used. It sets out, normally it can take several different forms. There's no magic specific format that a budget should take, but it should have the same component parts, whether it is for a company, a person, or a government. It will identify the incoming revenue. For an individual, that would be income. For a state, it would be revenue. For a company, it would be revenue also, sales, things like that, the actual cash in. Then you would identify the sources of the revenue, and then you would identify the outgoing, the expenses. And for an individual, you may have, for your income, you may have your gross income, which is your gross amount on your paycheck, and then your first deductions would be your Medicare, Social Security, any savings thing. If you've got savings coming out of your check, you want to account for that in your budget, because it's an automatic expense it's automatically done for you, but you want to keep track of that. And then you would have, for an individual, you would have shelter, whether rent or house payment. Transportation would be bus pass or car payment or subway ticket, in any insurance that goes along with that, cab fare if you regularly use a cab. Food would be included, insurance would be included, entertainment would be included, going to the movies, DVDs, Netflix payments, cable, etc. Utilities would be included. You would also have taxes included. Now, taxes would be different. That would, for a business, if you've got an LLC and you're taking draws and you need to keep track of how much tax you're going to have to pay on that income going forward. So basically, the way to build a budget is to identify all of the expenses that there are and all of the income that there is, and then you need somehow to match it up. And this can be fun. I know I'm a big nerd. This can be fun because you need to now decide, of the income that there's going to be, what is most important, and you have to prioritize the expenses. Some things are fixed, and that means those are expenses that are the same no matter what. That's going to be a car payment, that's going to be insurance, that's going to be mortgage payment or rent. Then there are variable expenses. Those change. Food changes. Are there going to be 3 kids home this week? But next week, 2 of them are on camp, at camp. The power bill may go up and down. Your credit card, you have a credit card, and those payments may go up and down. You may have veterinary bills for your dog that are only once a year. You may have bills for yourself that are only a couple of times a year. So to start, you would list all of your expenses. Another good way to do this then would carry it forward and maybe do a timeline or a grid. Identify which of those expenses are every single month, which of those expenses are only 4 months, which of those are once a year. Then, depending upon your income, a good way to budget it might be to take those items that are just a couple of times a year, take the total, divide it across the whole year, and allocate for it. So you're going to reserve some money to pay for those items all year long. That way, when the bill comes, it's available. On a practical level, some individuals that I used to work with would use a coffee can method. They would put their grocery money or things in a coffee can, and when it's gone, it's gone. So it keeps you in balance and it helps you prioritize. That way, the things that you have to have are covered first, and then other things that are luxuries or more fun will come later. But you can also use a budget to build in a vacation, to make sure you have money for it when it comes, to build in things for Christmas time, for special anniversary celebrations, for clothing items that you're going to need. And so if you sit down and do it on purpose, on paper, it is a great tool to help you.